Welcome to the Edge Market Update for October 27th, 2023. And we had a weaker week in commodities as Brazil and South America did get some timely rains in the short term. They've been very dry in their first planting season here currently. But we did experience some price weakness, but on Friday today we did see a little bit of a recovery at support levels. So that was a good sign heading into the weekend where it sounds like there may be some more risk premium being added to the markets with the geopolitical tensions in the Middle East. But we did close today on new crop corn at $4.81 a bushel. And you can see right here, we looks like we might be forming a higher low on this December corn contract at that roughly that 475 to 480 range. We've tested that the past 3 days and have held, and it looks like we may be forming a bottom. Would really like to see that hold that 475 area next week, or else in the short term could have the risk of coming back down to this 468 level and maybe forming a double bottom there. But if we do hold this level, would like to see price overcome the 50-day moving average, the 20-day moving average, and the 9-day moving average. Get back above all these short-term moving averages, and that would allow us to kind of change the short-term trend again and potentially retest this 505 to 510 range that has acted as pretty good resistance since the month of August. So we will continue to see how price reacts, and hopefully the trend will change here in the short term and give us some better pricing opportunities for our cash grain. Strength indicators are so far holding the long-term positive divergence in the strength, so that is good to see, and we did curl back up today. So hopefully next week we will continue to hold this and move higher to stronger levels. But currently a little bit weaker than a neutral reading, but so far it looks like it might hold. Money flow is extremely oversold. We sold off about 25 cents this week, so those did bottom out. They look to be curling up, and hopefully we can begin the process of moving back up to a neutral level at the very least. Long-term momentum did get back to a neutral reading here at the end of October, but we are starting to curl back lower, so that is a concern of mine. If price doesn't quickly change trend back towards resistance levels, we could potentially see this might be indicating a top in a longer-term market. But again, I really do like how this has formed a secondary bottom here in the short term. If we could get price back above here, challenge resistance, and potentially break out, that would be extremely bullish as well. Moving on to soybeans, new crop soybeans, the November contract will expire next week, so this is the last week of the November contract for 2023. We'll move on to the January contract. But so far, we broke out of this negative trend line from the September downtrend, and we found resistance last week at $13.18. And this week we sold off, riding back down this trend line right around these moving averages on the 20-day at the 1280 level. But so far on Friday, we had a really nice day. We closed on Friday at up 18 cents at $12.97 a bushel, back above these short-term moving averages, and we are looking to retest resistance at that 1318 level, and we also have the 50-day moving average at 1320. If we could get above that level next week, I would really favor us getting into this upper resistance level here in the 1350 to 1360 range, which may be a pretty decent opportunity to sell some cash soybeans. If you have decisions on whether to put those in storage or on basis contracts or anything like that, that might be some pretty good resistance levels to target for soybeans. We do have some positive divergence that held, and it looks like, on Friday we had a neutral close, but certainly looks like things are moving upward. Money flows did get oversold, so that does give us the opportunity with a lot of real estate to move higher if in fact support levels do hold here. And then long-term momentum, we did change to a positive short-term trend here, and looking to get back to neutral territory on a longer-term basis. But again, would really like to see this 1280 level hold next week. Bare minimum, if we had a flush down to like 1270, that's the least I would want to see price, or else we could put this longer-term positive trend line in jeopardy for support. So far through the harvest price discovery period, December corn is the average is $4.89 for the harvest price for crop insurance, and for soybeans it is currently at $12.84. So we are seeing a higher probability of corn revenue payments, not because of yield, but because price has dropped so much since the spring guarantee of $5.91. So even if you have hit your APH, there is a chance you could potentially have a revenue payment, and we would really need to meet up and make sure that we get all the ducks in a row to make sure if you did have a claim, we can get that submitted in a timely manner. If you have any questions for us, please reach out anytime. Thank you for watching the video, and have a great weekend.